Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday, May 29, 2015, and thank you. The thank you is for all the folks that came over to the site, that clicked the link below, MyStrategicForecast.com, and signed up for kind of the new launch trial, if you will. And it's going to be great. We've had a lot of folks sign up. In fact, a lot more than I thought. So I want to thank everybody that did. We're going to give you everything I've got. We're going to have a lot of fun together. We're going to make a lot of money together. I'm going to give you all kinds of price levels, and we're going to do even more than I've been doing in these videos. So this one, tonight's video, is going to be the last one of this series, and now this video is going to move over to the members area at MyStrategicForecast.com, the nightly videos, and then daily, and I'll do something, I'll develop some kind of video that I'll put out on YouTube on a regular basis, some kind of lessons of some sort, but that'll evolve over time. So anyway, let's get into the markets today because we had a lot going on, and this is the S&P E-Mini Contract. Let's go over to the daily chart. In fact, you know what? Let's start with the SPY. And we had a pretty decent down move today. The S&P was down over 13.5 points. The transports were down 67. The Dow was down 115. NASDAQ was down 28. So it was a bona fide down day. And you know what? If you go back to, remember the conversation we had 7 days ago, okay? 7 days ago, we discussed a cycle turn that was converging around Memorial Day weekend. There were 3 different cycles converging. I gave them all to you in detail, and you can go back and check the video from last Friday. Last Friday's video would be the 22nd, right? So I said 3 cycles were converging, and that should cause a market turn, and it happened. You know, with these cycles, most of the time, there's really no way to determine how far down or up we can go when the market turns. Usually, I can calculate that as it's happening. So each and every day, I can calculate the velocity and where the next support level should be, and that's what I'm going to give you tonight for Monday. But nevertheless, the cycle worked out, and I think that we have probably some lower prices ahead on Monday, but there's a couple of caveats. So let's go through them, and we'll give you all the numbers, and I'll give them to you on the SPY, and then I'll give them to you on the E-Mini contract. They're slightly different, but it's really the same market. It's just they're different numbers. So, okay, so what we had today was the 211, 211.20 area, this first purple trend line, really acted as really good support. So if we go over to the hourly chart, you'll see that we came down and pierced through it early in the day, and then immediately popped back through it as we got to the latter part of the morning session, and then we rallied up and then worked our way back down and kind of fought around this 211 area the rest of the afternoon and finished slightly below. So what I have is drawn this trend line in here, which will give us a guide for next week. And what I mean by that is I do expect a little bit more downside, but the caveat is, let me flip over to the E-Mini contract for a second because the numbers are on there, and this is where the real calculations came in. The caveat, and you can see what the important levels for the day today were, was the 2115, obviously important, right? You can see that, all right, right here. Came up, tested it again. In fact, if we go even over to a narrower time range, a 10-minute chart, you can see what happened here. Here's the 2105, which coincides with around the 211 in the SPY, and we fought that, bounced back up, came right to touch the underside of the 2115, and it was rejected all the way back down to 2105, which is the same as the 211 on the SPY, and that's where we remain the rest of the day. And so Monday, it's pretty simple. If you get below 2105 for any period of time, namely an hourly close, but you could actually flush through there Monday morning. You know, we've all seen that happen before. So below 2105, with any kind of conviction, you're going to look at 2090 and then the elusive 2085. And if I zoom out to the daily chart, okay, I have the 2085 here. Okay, I know this is a little squashed. I'm sorry about that. Here's the brown line is the 2115. The next line is 2105. Next line after that is 2091, and then 2085. And these are all good levels of support. And I'm not saying the market is going there Monday. All I'm saying is if we get below 2105 with any kind of velocity or conviction, then you can look for 2091, and then same deal, below 2091, close by is 2085. 2085 is an extremely important number, okay? So let me see if I can... no, you're not going to be able to see it. It's just too squashed in here. But it's a very, very important number. Anyway, the point is that there's your guideline. Now, on the upside, should the market go up, and by the way, it will go back up, and if we go down Monday, don't discount the fact that we may put in a low on Monday and then rally from Tuesday forward. And on the upside, we'll know that we're breaking out to new highs in the E-mini when we get above 21.23. So this is the darker purple line up here. That's the line in the sand on the upside. So if we go over to the SPY, what I've done here is, let's go to the hourly and I'll show you a trend line up top here. This is going to be your first, really your first indication. You see this blue downsloping line? That's your 50-period moving average. So if you get above the 50-period moving average and then start to get above this downsloping trend line, that's your first indication that we're probably headed to new highs. So the second indication would be a close above this number here, which would be 212.98. Okay, the 212.98 comes from all the way back to this number here, which was 212.97. So we pierced it by 1 penny, and a close above that, in my estimation, in my work, in my analysis, tells me that we're going to head to new highs. Now, I've done some calculations, and back to the E-mini, I'm just going to talk about it for now. The E-mini, the calculations I've done on the upside would take us to, well, first we would hit that target again of 2035, which we never got to. We got to 2034, and then beyond that, we would be up in the about 10 points higher, and then after that, I'll kind of reassess and give you numbers beyond that. But that's what's going on, and if that happens, you can look for a potential powerful rally into the summer, which could take us up, like I've been saying for a while, 100, 150 handles on the S&P. That's not out of the question. We could get a blow-off top, and then we can have a severe correction later on in the year. And I'll get more into that in later videos as time goes on. Okay, so that's pretty much everything I have on the S&P front. Let's go over to the gold market. Now, gold, let me bring up the M contract, which is the June contract, because that's where my lines are, but we're switching over to the Q contract, which is the, I believe, August contract, right? Yeah, August contract. So let's go back to June, and the numbers are close right now. They're pennies apart. So what we have here is still a market that seems to be, let's go to the intraday, because I want to show you kind of a couple of scenarios as I see them. Basically, I've been saying that I expect gold to make higher prices, and I'll show you the numbers again. I showed you last night. I think we're going to get up to the 1205, 1206 area, which is this darker purple line here, or is that fuchsia? And then beyond that, we're going to have to close hourly and then daily above that to see higher prices. But I really think we're going to get up there, and I thought we would have started to make a move. But there's two things. Number one is there's still the possibility that happens, a very, very good possibility. And the market, even though we didn't really start to make the move, which I thought we would, the market didn't get rejected. And if sometimes when it doesn't make a move in the direction you're expecting, it actually makes a move in the opposite direction, which happens a lot. So that didn't happen. So I'm still in the bullish camp. But if we're not up there by, like, let's say Tuesday, I think the deal's off the table. So I'll keep you updated on Monday. But I think we're still going to see 1205, 1206. We should see it over the next couple of trading days. And if we fail, then you don't want to be there, because we'll probably go back down to 1170, 1175 pretty quickly. It could be one of those quick drops all in, like, just a half an hour, an hour. It happens like that with gold periodically. And I would expect if we're not going to go higher, that's the direction, or that's to the magnitude we're going to go lower. So you probably won't want to be there for that ride. So, $20 on the upside, $20 on the downside is kind of where I'm looking, 15 to 20, give or take. Okay. So gold, I'm still expecting higher prices, bottom line. Oil. This is an interesting one. So oil, it's a good one, right? So I've been saying that we were in no man's land here. Then the other day, I said if we get close to this or we touch this trend line, I would get interested as a buyer. And then I told you that I had an indication that we were going to go all the way up near $60. Okay, and you can go back and check the video from yesterday and the day before, and maybe even the day before that. So been telling you this for a few days. And if we look at the intraday chart, okay, I just want to show you what happened here. Look what happened. So I started talking about that, and I know I gave that to you at the highest price was about 58, and I said that there was about $2 upside in the price of crude oil, and well, that turned out to be true today. And that was a nice move. That was a really, really good move. What caused the move? That's an interesting question, because if you listen to the talking heads on TV, it was inventory, it was supply, it was shutting down of rigs, it was all kinds of stuff. Well, if there's somebody telling you that higher prices are coming, and the higher prices come without the news factor, right? I didn't know what the reason was going to be. There's no way I was going to... I don't know what the reason is. I don't care what the reason is. The point I'm trying to make is that the markets are independent of each other, and they're also independent of the media and the news to a large extent. Now, certainly the news can move a stock and markets one way or the other, earnings and all that stuff, and that's short-lived stuff. But certainly oil didn't go up $2 today all of a sudden because we shut down rigs this week or last week or whatever. I mean, that's not the reason. Okay, those things are in the works for a long time. Everybody in the business knows what's going on, whether rigs are operating, shutting down, how many, who's involved. This is, we're the last to find out about that kind of stuff. So I'm just saying that markets trade independently of everything. They trade of their own volition, and when you can read the market, it can serve you well. And you can see that I make a lot of accurate calls in oil, and oil is actually a relatively easier market to forecast than a lot of the other markets. I don't know the reason. All I know is I've had much, much more success with oil than any other market under the sun. I don't get them all right, and I don't have them all the time. I don't have a forecast every week or every day, but when they do come, they're pretty lucrative, right? So we're going to keep doing it, and I think that there may be higher prices ahead, but I have in mind a number and a possible time frame for when oil could turn back down, and we'll keep the members in the loop on that one too, because that could be a nice trade to the downside, just the same as this one to the upside. And the downside could be more. Okay, so let's flip over to the bond market. We'll look at the TLT, and let's get a bird's eye view here. We'll look at the daily chart, and here's that level again. What a great level. I didn't take that trade. That is really irking me that I didn't take that trade, and I never did get in. So are there higher prices coming in bonds? Yeah, there's good velocity off this move. We may consolidate for a while, or we may just rocket higher. And if the market goes down on Monday, meaning the stock market, there's a high likelihood that the bond market may have another rally. So lower rates, higher bond prices, and that is definitely in the cards. So I think there's higher prices coming in the bond market The TLT represents the 20 plus year treasury bonds. So there's anything from 20 to 30-year treasury bonds in this basket, which is an ETF. And this was a good level. Higher prices coming. But overall, if you want to take a longer-term view, okay, you can see here that we made this could be considered a blow-off top, okay, and then we came down, and then what we did here was we tried to rally back up and failed. So we made a lower high. So let's just see where we are from a Fibonacci retracement perspective and get a rough draft of that and kind of see what price has been doing. Okay, so you can see price first came into around the 382 retrace, okay, and bounced up. Okay, we hovered around the 25% retrace for a while, and then we collapsed back down. That was the failure of this is the lower high. And now the market stopped right around the 50% retracement, and that one day we moved all the way to that line that I had in there that I'm kicking myself that I didn't take advantage of. And then now we're having some relief off that, and relief meaning, these conditions, this is an oversold condition here. This becomes an oversold condition. Nothing goes in a straight line. The market has to go in ebbs and flows, right? We go up, we go down, we go up, we go down, we're going up, and then we'll go down again. And what'll happen is this will turn out to be a very long-term, multi-year high in the bond market. That I'm positive about. It's just a matter of how high we're going to rally off this move. And if you want to know that, you can get a good estimation by using the same tool, the same Fibonacci tool. In fact, let's see if we can do it on a daily chart. Okay, we'll take the same concept from high to low rather than low to high. Okay, and you can see where today we came right into the 2.5 retrace, all right, and we stalled out there. And then the next stop is most likely the 382 retrace right around 126. And you can see how the markets like to react to these numbers. You see how this 382 retrace, even though this low wasn't in here to draw that in, but nevertheless this number proved to be important. So you see how these markets trade with numbers. It's drawn to certain numbers, and the idea that I try and do as an analyst is solve the unknown. And the unknown is what number are these markets trading to? And I use all these tools at my disposal, and Fibonacci is one of them. There's other calculations I do, but it's really all math. And we try and eliminate the lower probability items, and we kind of package together the higher probability items, and we build a case based on the numbers that the market should be drawn to. And if we're doing our analysis right, we're going to be right a lot of the time. Look at this one here. This number here, that wasn't important until this low was put in, because I drew the Fibonacci retracement from high to low. But yet way back here, this 123.25 was extremely important. So what that's telling you is the market is trading to numbers it deems important. And remember, I always say, we let the market tell us what to do. And this is exactly what I'm talking about. I'm letting the market tell us what to do by trying to solve for the unknown number. And that's exactly what I've done here. Okay? So hopefully that makes some sense to you. Let's see. We did gold. You know what? I want to talk about GDX real quick. So let's backpedal to gold, because we haven't talked about it in a few days. And remember, I've had these lines in here for quite a while. So I had the upsloping trend line we broke, and that proved to be bearish. And then I drew in these two lines here. And you can see we hit the line here. We hit it again here and bounced up. So it is important. And we'll see if we hold this line. And if we don't and gold rolls over, you can expect GDX to roll over. And then it will probably make a run for this line here. And this line is right about, it's easier if I do it this way, we'll call it 1875 would be the next stop. So you can see, again, same routine. We're just trying to solve for the unknown numbers. And when the market continuously responds to the numbers, for example, where I draw in these trend lines, then I know the numbers are important. The market thinks they're important, so all I'm doing is taking a cue from the market. Okay? So we did gold, we did GDX, we did oil, we did bonds. How about the dollar? The dollar. Okay, here we go. So the dollar, okay, so the dollar is in an interesting position. There's no trade here, but here's where we are. We hit the 618 spot on up to 97.87, I think was the high. Okay, 97.88, and the Fibonacci retracement was 97.868. And then we're backpedaling a little bit. Now, you can consider this to be bullish consolidation if we continue down like this, making possibly getting ready for another run higher, okay? Or the flip side is that we're going to see a lot more downside, probably down to the 95, maybe 95 and a half area, which would be a big move from, especially in a currency from where we are now. And I really don't know which way it's going to go. All I know is one of those two things is going to happen. Either we're consolidating for a move higher, or we're going to actually roll over and make a significant low, or not necessarily a low, but a significant decline by Monday or Tuesday of this coming week. So you can see the market's a little iffy, the stock market. You've got gold that I think is in a precarious position, and I'm trying to get the arrow out of there. It's bothering me. And okay, I had to pause the video and get that arrow out of there. I'm crazy. But so what I'm saying is that it looks like there's a lot of potential culminations taking place early this coming week. Possibly oil on the upside, possibly gold running upward, possibly the market running more downward if we get below the numbers, and the dollar possibly running downward. And if we don't run downward, then I'm going to anticipate another move higher. So it's not that I don't know what's going to happen. I just need the market to give me more information so I can eliminate the stuff that's not likely to happen and focus on the stuff that is. So I need another day or so for me to say, what's the likely scenario. Okay, so I think that's it. I'm going to leave it there tonight. I'm David Frost, mystrategicforecast.com. Don't forget to come over to My Strategic Forecast if you haven't registered yet, and get on the list, and you'll continue to watch these videos on a nightly basis, and I'll give you as much information as I can. Have a great weekend, everybody. Thanks for tuning in.